The main reason that Jerome Powell has so much confidence in the Fed's ability to slow down on the rate cuts is because Powell is convinced, and I guess everybody else on the Fed, that we've got a fantastic economy. I think he described it as remarkable. We've got this remarkable economy with a very strong labor market. This is what Powell believes. And so he doesn't think that the economy needs these rate cuts to support it. And so he can keep fighting inflation. But Powell still doesn't understand that the economy is not strong. It's not strong at all. When he was asked at the prior press conference, or I don't know if it was a press conference, maybe it was a press conference, if he learned anything from the election, and he refused to comment because he didn't want to talk politics, which, it really wasn't a political question. But what Powell should have learned from the results and the exit polls from the election is that the economy is not strong, because the people living in the economy told everybody that the economy was weak. They voted for Trump because the economy was weak. If the economy was strong, they would have voted for Kamala, but they didn't. They voted for Trump. Also, one of the reasons that Powell thinks the labor market is strong is because of all these jobs that we've created. Well, most of them have been eliminated from creation because they were never created in the first place. Powell is completely ignoring the massive downward revisions in prior payroll numbers, and more downward revisions are coming. And they're ignoring even more bad economic data that came out this week. In fact, one of the data points that came out this week that nobody even talks about is the current account deficit. This is for the third quarter of 2024. Our current account deficit for the quarter was $310.9 billion. That's a record. We've never had a current account deficit that big in one quarter. We blew through the record from Q1 of 2022. And this is a record, and it's going up. Look, wealthy nations have current account surplus, right? You look at Japan, Germany, China, Switzerland, Singapore, all these countries, Scandinavian countries, the wealthy countries, they all have current account surpluses. Only the United States. Well, I think Great Britain has a deficit. They're pretty screwed up over there. But all the real wealthy countries have current account surpluses. America, at the height of its economic power, we had the biggest current account surplus of any nation. So normally, a current account surplus and being a strong, wealthy economy, they go hand in hand, right? It's like a real scorecard of your economy. Are you generating a profit or are you operating at a loss, right? It's like a P&L on a nation. You want to have a current account surplus. That includes your trade position and your net investment position. What makes up the current account are goods, right? We have a huge deficit in goods, but we also have a deficit in net income. What that means is that foreigners earn more money on the investments they have in America than Americans earn on the investments that they have abroad. And so we're just a two-time loser here, and we've got this huge current account deficit. Multiply that out by 4. If we keep doing that, that's $1.2 trillion a year of red ink hemorrhaging out of the country. And they're saying that we got a strong economy, that we got a remarkable economy. What's remarkable is that we can even survive with this enormous current account deficit. Any normal country would be having a currency crisis and a bond crisis if they put up numbers like this. But we get a pass. We can get away with it because of the status of the dollar. Again, here it is going up once again. We have the dollar rallying. That means we've got more rope to hang ourselves with, and that's exactly what we do. We run even bigger deficits because our overvalued dollar allows us to do that. But, another thing that's going to happen with the strength of the dollar, which I believe is temporary, but, it could be temporary for a little while longer. This is going to put a lot of upward pressure on inflation in Europe, in Japan, in South America, up in Canada. I mean, look at the Canadian dollar. Look at the Australian dollar. These currencies are getting decimated. That's going to put a lot of upward pressure. So these countries have been cutting interest rates because their economies were weak. Well, now they're going to be getting strong inflation. So we're really exporting this inflation around the world as the dollar is strengthening and these other currencies are coming down. That means all these commodity prices are moving up. Oil is not moving up for us, but it's getting a lot more expensive down under and north of the border in Canada. So you're going to see upward pressure on inflation in the countries that are now cutting rates because the economy is weak. Well, now what are they going to do? That inflation is going to get so much stronger, right? They're going to have to start tightening policy. There's going to be a lot of pressure, but of course, that's just going to make things even worse. I mean, all these inflation chickens are coming home to roost, but they're coming home here too, because interest rates, I think, are going to keep rising and the stock market's going to keep falling. I think we could have entered a bear market. This could be the beginning of it. I even posted that on X yesterday. I said, this could be the top. We could be starting a bear market because there was so much crazy optimism. Nobody thought the market can go down, which meant that's probably what was going to happen, right? Because there was every reason to be bullish and no reasons to be bearish, according to the mainstream, which is reason in and of itself to be bearish. But we get a bearish, a bear market in stocks. That's the reverse wealth effect. Long-term rates go up. Mortgage rates are about to spike up. This is going to be another negative for the housing market. I can already feel some cracks building in the banks. Everybody was expecting more rate cuts. We get new highs in long-term yields. We moved back above 5% in the 10-year, which I think we're headed. We're 4.5% now, but we could be up at 5% very quickly. We could be looking at more bank failures. And I could also imagine, Donald Trump is coming into office. He's not going to like it, walking into a bear market. When he just went down to the New York Stock Exchange and rang that bell, and he's so excited, because he looks at the Dow Jones as a barometer of his presidency, and he's going to see the market tanking. That's not going to be something that he's going to be happy about, especially if the Fed is taking away the punch bowl when he wants it spiked. So there's going to be some fire there between Trump and Powell, because Trump, of course, is going to want easier money to prop up that market if it's falling, and to prop up the whole economy if things start to go south, which they probably will. And, Powell is just talking about, again, this remarkable economy. Well, the whole thing is being downwardly revised right in front of his eyes. I think he's got a big ego. He doesn't want to admit that the economy is weak because that would be an admission that the Fed screwed up. In fact, one of the things he said in the Q&A, and I'm going to get to that, but, he was bragging about how much progress has been made in reducing inflation and how little damage has been done to the economy. He said, look, nobody thought we can get inflation this low, even though it's not down to 2, it's 2.5. Nobody thought we can get this low without causing a recession. And look, we did it. No, he didn't do it. They did cause a recession because we're already in one. We've been in one for a long time. It's just that they haven't done enough revisions in the data to reveal it. But the voters knew that we were in a recession. That's why they voted for Trump. That's why they told the exit poll people, I voted for Trump because the economy stinks, because inflation is too high. And in fact, Powell, he dismisses it. He says, well, the reason people don't like inflation is because we had a huge increase in prices. Yes, thanks to your policy. And he says they haven't come back down. Of course, they haven't come back down. And so he says people are upset because it's going to take many years for their wages to catch up to prices.